Lesson 14, Time Frames to Trade and Patterns. In Lesson 14, you will learn what time frame charts to look at and to trade based on your trading style. You also will learn how to identify and trade different trade patterns such as a head and shoulders, inverse head and shoulders, channels, wedges, and flags. Okay, so first off, what different time frames should you look at? Well, over all the lessons, I've shown you a few different. I've shown you the 512 tick chart. Okay, here's a 512 tick chart. Okay, it's going to give you, what this chart does is it gives you more micro moves. Okay, it lets you see support and resistance. It kind of breaks down what's happening inside the bigger patterns. Okay, so for an example, right here, we actually see a double bottom. Okay, we also see the W pattern a little cleaner here, correct? Okay, so you're able to see these different patterns a lot easier with different time frames than, on the smaller time frames such as a 512 tick chart, maybe even a 1400 tick chart. But 512 tick chart's my go-to for patterns. Okay, another one, the 1 minute chart. Here's that same pattern on the 1 minute. Okay, again, you're going to see maybe a little longer time frame. You're going to see different patterns, maybe different reversal candles such as here. Okay, you have a nice doji hammer at the lows. You also have, you're just able to see potential spikes here and there, just more of reversal candles, right? My next time frame that I'll use is a 5 minute chart. Okay, now with the 5 minute chart, you really can't see that same double bottom, right? It's a little harder to see right here, because what's happening is the 512 is showing you a little micro frame. Okay, this is actually a bigger time frame. Now, I personally like the smaller time frames for some charts that work with some indicators, such as the double moving average, okay, the 2200. I like that for the 512 tick chart. Other charts I'm not so impressed with, okay, they don't track as well. I like the 200 period moving average, exponential only, okay, only exponential. I like that chart for all time frames, okay. It just works very clean, very good. Other charts, time frames, 15 minute, right? I like to use, kind of going back to the 5 minute, also to the 15, using the 50% retracement, okay? They work really good. Of course, the 5 minute is going to have less risk involved, but you might get a little choppier. As with the 15-minute candles, you might not have as, it might not be as choppy, but you actually are going to have a lot more risk, okay? But with that risk also comes reward. And then I also enjoy the 1 hour chart, okay? I like the 1 hour chart more for looking for patterns, okay? Looking for the bigger time frame, potentially looking for maybe patterns such as wedges, support lines, stuff like that, okay? It's all personal preference. And then try and find support resistance levels. I really like the 15 minute, the 1 hour, and then of course the daily, right? We know, hey, price comes down here, we'll look to be a buyer on the very first test. So those are the time frames that I personally like. Oh, and then one more, the tick chart, the 5-day 1400 tick chart. Okay, it's just this one can be really good for being able to see channels, drawing channels, things like that. it just gives you a different picture. It gives you, hey, what's happening on the bigger picture, right? Price breaks down, we come back, kiss it. Okay, you might not see that on the 512 tick chart, but you also might not see it on the 15-minute chart. So different charts, different levels. Now let's get into part 2 of this. Let's look for specific patterns. Okay, a couple of the patterns that I really like to look for, and let's pull up a tick chart, okay, and I'll just highlight them. First one that I look for are double bottoms, right? The W formation, something like this, right? We actually have another one right here, okay, and what these are is price comes down, right? We go, come back to a double bottom, and then price extends. Those are called W patterns, okay? Those are the lows. On the upside of these patterns, I like to look for what are called M patterns, okay? M patterns, I say meltdown, okay, for lower. W patterns for winner, okay, because you're looking for a winner to the upside. So right here, we have a nice W pattern, right? Price goes up, comes down, goes up, and then fails. Okay, those are M patterns. Other patterns I like to look for are potential head and shoulder patterns. Okay, now head and shoulders, maybe I'll go to a 5-minute chart. Okay, and I'll look for, let's see if we could find a really clean one. We'll say this one right here, right? Kind of draw a trend line. This is what you would call a slanted head and shoulders. You have a high here, a higher high, a lower high. Okay, so you have the left shoulder, the right shoulder. Sorry, left shoulder, the head, and the right shoulder. Here's your neckline. Price breaks down from it. Okay, let's see if I could find another one. Also, inverse head and shoulders, right? Here's one. Okay, so kind of the same thing. We have a shoulder, the head, the shoulder, right? And then the neckline, and price breaks above. This is called an inverse head and shoulders. Inverse head and shoulders are pretty much where price makes a low, we rally to a resistance level, we make a lower low, we rally back to that same resistance level, which is the neckline, pull back, but this time we make a higher low, right? So, which is usually around the same level as the other shoulder, right? So you have a shoulder, head, shoulder, and then price breaks up. Now remember, inverse head and shoulders, the way I like to trade these is I don't necessarily trade the pattern, but I trade the completion of the pattern. So I look for, take my Fibonacci, right? First thing I'll look for is the first pattern, okay, or the first target, which you could see we touched and then we pulled back a little bit, of the minus 23.6. And then the second pattern is where we take the Fibonacci to the halfway point, okay, right here, and we look for the 50%, or sorry, the 50, right? So you have 100 to 50 and then 50 to 0. That's kind of flipping over that inverse head and shoulders, and your target now becomes this right here, right? The 0%. And as you could see, we actually touch it right here and we pull back. I look just for that quick smash and grab trade where I'm looking for 1 or 2 points. That's it. Okay. The reason I look for the smaller moves, because a lot of times, sometimes they'll roll over, you'll get bigger moves, but all I'm looking for is, hey, the target's been completed. I'm looking just for that quick in and out trade because the algorithms are trading these, right? So what happens is that trade, when the pattern is on its way to completion, there's about a 90% success rate that will touch exactly to the tick, and then we'll pull back a little bit. Okay, as far as the pattern itself, a lot of patterns fail, so there's only about a 50-50% chance of them working. So I'd rather have the higher percentage, make less money, okay, but still make money on it. Next, we're going to look at channels, right? So a good way to draw a channel, just go from one low to the other, okay, and then right click, extend to the right, okay, and then you can always just click on redraw as a channel. It'll give you an identical, okay, as you could see, touch here, 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 3 anchor points, right? That's all we need. Price rallies and pulls right back. So we know as price rallies, okay, we're going to look to short. Also use your RSI. See if it's oversold or on the way down. Is it overbought? The other way to play it is once you break down from the channel, look for that retest. Something like right here, right? We broke down, we retested the back, okay, and then fail, and that's your entry. And if it gets back inside, again, look at different factors, look at your RSI, see if it's oversold, all these different things. Flag patterns, okay, I like to look for flags, something like this, right? We have a nice flag, and here's the flag pull, right? We see it here, flag pull, and price consolidates to lower, and then it breaks out to the upside. Same exact thing over here, right? So now you've seen flag patterns, okay? You've seen head and shoulders, you've seen inverse head and shoulders, you've seen channels, okay? And you've also seen the trend lines, okay? So when you start to tie all these together, okay, these are all going to increase your odds of success. All these patterns, all these different time frames, find what works for you, okay? Because some people, hey, look, if you like a longer term trade, you're looking for the bigger moves, right? Then go to a bigger time frame. Draw a trend line to the bigger time frame, something like this, right? You could see, hey, look at this. We actually have this pattern, right? This is a ascending wedge, right? It's kind of where we're making higher lows, or sorry, an ascending triangle where we make a low, a higher low, higher low, but the tops are the same, right? Hey, price could potentially reverse and go out and break out to the upside, right? It's just making different patterns. One more thing I want to leave you with. Another pattern that I really like are the wedges, right? I like potential falling wedges, something like this. This is a falling wedge where price comes, gets real narrow, and then breaks out to the upside. Falling wedges are bullish patterns, okay? Then we actually have rising wedges. Rising wedge is something like this. Okay, where, and we could actually probably draw it from here all the way up, right? It kind of comes up, tests, pulls back, and then it breaks and it falls down, okay? It starts really wide at the bottom, and then it starts to get very narrow, okay, at the top, and watch for a potential breakdown, double top, M patterns. Watch your RSI. All those different things, because they're all going to help you. And again, go out farther, you'll see a lot more patterns. So this lesson's really good, I believe, because it shows you different patterns on different time frames, but all these patterns could be drawn on all the different time frames, okay? Look for channels, look for support and resistance levels, look for anything where price potentially could break down for that bigger move if you're looking for those bigger moves. Okay, so coming up next is going to be lesson number 15.